Hello traders, good morning. Welcome to this live webinar here, 10th of November, 2020. And well, we're going to take a look at automated trading systems, take a look at some research that I found, that I received actually from a friend. And that's very interesting, that compared trend system to a breakout system during the crash in February, March period, when there was a lot of volatility and the markets were free falling. So a very interesting study. I'm going to show you that. Second of all, we'll have some announcements. Of course, it is November, so we're getting closer to Black Friday specials. Someone asked yesterday in the live wave webinar if there's going to be some special promos. I checked with our team and we decided indeed it makes sense, so we're going to do that. We'll have the details soon. So I'll make a small announcement on that as well. So let's start. All right, let's move this away. There we go. Okay, so this, yeah, it's a research paper or PDF, few pages, from, I don't know them personally. I got this from a friend. I don't know this firm myself. Graham Capital Management is the one who made this research note. But it's interesting. I wanted to share it because it is about automated trading, or it is about testing systems. Let me say it this way. And they were looking at trend following strategies versus breakout strategies, and trying to see if the results that were seen with these types of strategies. They use the MACD for the trend strategy. So of course, obviously, there are tons of trend strategies, there are tons of breakout strategies, and each is going to perform differently, of course. This is just an example, but still quite interesting to compare the two in this study and how they reacted during this, this volatility and also this crash, right, in February, March, specifically in March, when a lot of assets started to fall very, very volatile, very quickly. So what they did was basically they started with a simple experiment. They were looking at the returns. Let's see. They basically, what they did was they reordered the series of results. So you have a certain series of results in March, right? -5, then -5, then -10%. And what they did was they reordered the results in a different order, right? So not -5, -5, -10, but -10, -5, -5, or -5, -10, -5. So by shifting by rearranging the results, they made new price trajectories. They made new price charts with the same starting spot, though, and with the same outcome, but different paths. So this was the actual path in this graph. And then there were different versions of that, as you can see, green and blue, indicating two variations of that path with the same starting and the same ending spot. And then they applied the same strategy to the actual result and to the, let's say, the fake or the simulated price path, okay? And they wanted to see if there were any different outcomes, or how different the outcomes were, okay? And the interesting is, yes, it did make a substantial difference, and that's why they went on with their study. And basically, what they did was they made using Monte Carlo simulations. They made a randomly sampling of the data repeatedly to construct a large what-if scenarios. They did it, thousands of times, basically, to get a larger range of price trajectories, simulated ones. So this graph is indicating that. Okay, so I hope you're following me. These are all potential trajectories with the same starting and the same ending moment. And you can see the distribution. Of course, the thicker the color, the more paths there are. The lighter the color, the less paths there are in that particular area. Okay. And then they did the same. They applied the same system strategies to all of these trajectories to see what the distribution of the outcomes were. And for the trending strategy, this was basically this was the variation of the results. So more or less, almost everything was negative for trend strategy in that time. As you can see, this is 0, -10, -20, -30, but some were certainly worse. There were a few that were below the -30. There were a few that were actually just in positive. So you can see that with that same trend strategy, there was a wide range of outcomes possible depending on the exact price trajectory. And the reason why they have all these trajectories, of course, is that with a next crash, price doesn't have to move exactly as it did in March 2020. It will move differently, probably. So that's why they simulate these thousands of times to get a better understanding of what could happen in the future. It's, of course, not a specific outcome, but rather a range of outcomes that is likely to take place. And then it depends, of course, what exactly, within that range, of course, there's one specific outcome that will occur. But it's good to know the range so that you have an idea about the probability and odds. And as you can see here, most of the results were somewhere between -20 and 0, as you can see, probably, right? Now, with this specific strategy, during March 2020, the result they got was actually around -24, as you can see. This red dotted line indicates the actual result with that strategy during the March 2020 decline. So as you can see, the trend strategy in reality actually had a worse off result than what you typically would expect on average. Only 9% of the results were actually we would expect a worse result. In 91% of the cases, you would expect a better result. Sorry. So that was quite unlucky, let's say, relatively, for this trend following strategy. It had relatively worse off result in this particular case during March 2020. Now let's take a look at the breakout strategy. The breakout strategy did a lot better, first of all. We're mostly looking at positive gains, as you can see. And wait, let me see. No, this is maybe something else. Let's see. This is, sorry. Actually, this is the same, I think, trend strategy, but if you repeated this to all markets, not only to the S&P 500, you would see actually, so this is the S&P 500, okay? Trend strategy on the S&P 500. This is trend strategy on a wider range of markets, not only the S&P 500, but I think it was quite a wide list. It's somewhere hidden in this text what the exact list was, but there were a lot of markets included in that. And then you can see that actually only 4% got a worse result. So even more unlucky, let's say. Now let's compare it to the breakout strategy. So you can see here, now I might have misunderstood something. I read the entire text, but I'm not an expert in this. So if I made any mistakes, of course, please forgive me. But basically, here you have the trend strategies, the red peak, the blue peak is the breakout. So you can see that the breakout strategy, generally speaking, doing better, right, than the trend strategy during this decline in March 2020. No, wait a second. Let me rephrase that. The red line is the actual result of the trend strategy during March 2020. The blue line is the actual result of the breakout strategy during March 2020. Okay. So as you can see, the breakout strategy doing way better than the trend strategy, right? The blue bars, the blue vertical line is way more to the right than the red vertical line. Those hills represent the distribution, the expected distribution of of that strategy when simulating this thousands of times. So you can see that the simulations indicate that the breakout has indeed a higher chance of performing better. Not always, they intersect here. So there is a small chance that the trend strategy could do, in some cases, a little bit better than the breakout if the trend strategy performs very well, but the breakout strategy performs very bad, as you can see. There is a small part where uh, trend could outperform the breakout. But in most cases, when we look at the peak, as you can see, the breakout outperforms the trend in most cases. Now, if we look at the specific results of March 2020, we see that the trend strategy was one of the worst results achievable, whereas with the breakout, it achieved one of the best results. So those results are not, um, let's say, typical, right? For the trend, we saw worse results. For the breakout, we saw better results. So with the next potential decline that is similar in its kind of trajectory and pace, this wide gap between trend and breakout strategies would probably not occur, as you can see when looking at the odds. At least is less likely to occur again, looking at the distribution and probability of both of those strategies. All right, so I thought it was an interesting study, and shows you what one could do when looking at different ways of testing. So you know when we're creating our own strategies, we of course also want to look at different ways of in and out sampling and forward testing and walk forward testing, and that's something actually we can discuss maybe in next week's webinar, so hang on for that. At this moment, of course, as you know, there are 4 automated trading systems that we're trading. The LOA.EA and Ultimately, LOA.EA from Mislav Nikolic and Ultimately from Mislav and myself. London Open Advanced EA from Carlos, our programmer, and Nenet. And then the ZUS.EA from myself and Nenet. So yeah, basically, and we'll be adding LOA.EA Bitcoin very soon. This is looking great. The results have been up to par, and they're similar as what we expect. I can show you that right now, in fact. So that would be the LOA, but on Bitcoin. So diving into cryptocurrencies now would be interesting. In a couple of months, we're also testing a 50A. It's called Let's Dance, and it's been trading by January. It would, I think, trade 1 year on a live account. So we will probably offer that as well in the next couple of months, maybe 2 months from now, showing great results as well. Very stable. London Open, that's Let's Dance. So we have 50A. We're also in the background working on more EAs. I'm working on my own SWAT EA based on fractals with Carlos. We are programming the EA at this moment so that it follows the rules. Then we need to test it, make sure that the rules are implemented correctly in the EA. And then we'll do back testing, and we'll do in and out sample testing and walk forward testing, Monte Carlo simulations. We're also testing other EAs with the help of other traders that are supporting our EA creation effort. So hopefully our goal is to get 10 EAs. So there's a wide kind of variation. Let's see if we get there. But a portfolio of EAs is our goal eventually. Well, we already have it now, but a wider one, let's say. Let me show you the LOA.EA Bitcoin results. Hang on, folks. All right, I found it. Let me share that with you. All right. Yeah, so basically here you can see this is the real account, 4.75% in 1 month, 15 trades. And here you see the back test, and it's very similar, generally speaking. The results about the same, as you can see. Maybe the equity curve a little bit different. There was one difference, I think. Let me check. Results are very similar. All right, there's just one difference. Let's see. The volatility of the spread and a small difference in the size of a candle caused one more real trade to be opened. So that's one small difference. And the data history ends on day 5. So the last operation that was closed in real account does not show up in the final back test. So it's very similar. So, that's positive. Of course, it's just 1 month. So obviously more live trading is needed. But yeah, it's looking very promising when we're looking at our own back testing too that Carlos did. Let's take a look at that. So yeah, the LOA.EA is already available. Also with Bitcoin, by the way. It's just one. We're just adding a instrument besides zero odd. LOA.EA will also be allowed. Possible. Sorry, able to trade Bitcoin. Some of my words today. Here you can see the backtesting that was done with the LOA.EA Bitcoin. And yeah, monthly 96.64%, 13.5% drawdown, 655 trades, profit factor. So looking very stable. This is about 3.5 years of testing. And yeah, great results there. So we're seeing the same in live trading. So I think that Bitcoin, very serious candidate here in the near future to be traded. There was also a walk forward testing done on this. And I can show that next week when we discuss walk forward testing in general. Okay. So let me see if there are any questions at this moment. Any idea about automated trading for the live signals? No, not at this moment, unfortunately. We're working on the EAs themselves, first of all, but yeah, depending on, it could be very, very soon. If depends a little bit on my EA. And Nenad is also working on his EA with the Black Widow. So I guess it depends on those two. If those two work well, we could consider automated signals from higher time frames. I think not from very low time frames because of the speed, to follow the setups, of course. But that could seriously be an option. So let's see how that develops. All right, because I failed to mention, but then it is also, of course, looking at the EA. So you got me with fractals, and then it was Black Widow. We have special software that we purchased for designing our EA ideas. We're working with Matus and Thomas on that. We have Carlos, of course, working on Black Widow and SWAT, fractals, EA. And we have Less Dance maybe coming soon, and LOA.EA Bitcoin. So that's all great. So second of all, regarding Black Friday, yeah, let me check exactly what we had in mind. I forgot. I'll make an early announcement already for you so you can have an idea. So Black Widow and SWAT will have a 35% discount, and I think 1 month of ECS Live for free or extra. I'm not 100% sure there. Rush EA and Ultimate EA will have 25% discount if you rent it. If you take both Rush and Ultima, there's a 39% discount for the rental. And with Zeus EA, Explorer 25% off, Builder 35% off, and London Open EA minus 25%. And then with the profit share, there's a 10% lifetime profit share reduction for deposits above 5K. So that's, I think, really an interesting option, and 5% lifetime profit share reduction for deposits above 3,000 euros. But keep in mind that the minimum lifetime profit share is 20%. Okay. So you can't drop below 20%. That's the only footnote that's very important to know. So if you're already at 25%, you can't go below that 20, right? If you're at 30, this is a great opportunity to get a lifetime profit share at 20% with deposits about 5K to get a 10% reduction, 3K deposit to get 5% lifetime reduction there. So interesting offer, I think. So once again, Black Widow and SWAT 35% off. Rush and Ultima 25, Rush and Ultima 39, Zeus 25, Zeus Explorer, Zeus Builder 35%, London LOA.EA 25%. This is for Black Friday. Those are the rentals, of course, and then you have the profit share discount. All right, any questions? I didn't see any questions in the forum today. So that's it for now. Next week, we're going to talk about walk forward testing, in and out sample testing, and I'll show you how that was done with the LOA.EA Bitcoin, and why I think that it's looking good, and why it looks robust, and why I think that even though it only has 1 month of live testing, that it looks very robust. Because of this testings, of course, that confidence goes up. So I'll share that next week. And hopefully we'll have more good news about other EAs, of course, developing at this moment. Yeah, Rush EA, Ultima EA, Zeus EA, LOA.EA, hopefully more coming soon. But that's it for now then. No other questions. We'll have an announcement, by the way, about Black Friday discounts and offers and specials soon. I think by next week. I'm not sure exactly when Black Friday takes place, but I guess somewhere at end of November. So we'll have that soon so you can review all of that. Wish you all great trading and see you soon. Cheers. Bye-bye.